Hi back everyone. Welcome back to this video series. So far we have gone through some of this material. So I'm showing it. So the most important one was swing points, valid swing points, because they are the actually anchoring point for our actually mind to define structure, and every other thing we want to do is based on this swing point. So that's why you need to just focus on them as much as you can and practice it and make it ingrained in your mind. Now that we have learned how to define swing points, especially the last method, that is the best one. Now we're going to use it to determine our structure and pattern type. So we can have a downtrend, uptrend, or sideways ones, or choppy ones. So this diagram shows how this downtrend happens. So this is our swing point. It represents our valid low. And if we break this one, this valid low, it becomes a this one becomes a protected valid high. Okay, so this is becoming a valid pullback and also valid protected high. So from here to there is our area pullback, and in this point, our valid pullback is confirmed. The same story continues here. So we will have valid low again after we breaking this valid low part, and we have this valid high, which is protected one, which means that it is hard to just break this one, and 70% tendency of the price is going down rather than breaking this valid high, which is protected. So now, again, the same story here. So we all the time at the end of the chart, we're waiting to have two scenarios, or sometimes three scenarios. So whether to break this one, the first scenario, or this one, which is the end of a downtrend, or whether we have some valid low and highs inside these two valid protected high and valid protected low. So, but the point is that after we have this breaks, okay, here, sometimes we have this valid pullback, which is protected taken, because all of the trends have their time at the end of the day. They're going to break either way, up or down. So, but the point is that whenever we have this valid pullback broken, okay, if we have a broken valid pullback, it is the end of downtrend, of course, but we cannot say it is the starting of uptrend. Okay, so it means that end of downtrend doesn't mean the start of uptrend, and vice versa. If we have end of uptrend, we don't have actually start of downtrend. So here this is uptrend, and here, as you see in this part, we're ending. Okay, this is the end of uptrend because we are breaking valid pullback, which is protected, as you see here. And this is our box. We're expecting price to continue downtrend, but what happens? Comes and breaks valid protected high here. It was valid high after it is broken, so it becomes valid protected high. So, but we can see that price breaks both valid protected low and both valid protected high, and it again just gives us another area of another zone or valid pullback. So then again it continues and it gives valid protected low. I should have written valid protected low here and also here, and valid high. So, and now we're expecting either the price breaks up or down or just goes in range bound. And again, as in the end of that one is not the end of valid, actually end of the trend. Sorry, start of the downtrend. So here we have sideways or trending range. So trading range. So again, here we have initial uptrend movement. So, but again, this initial uptrend movement was the valid pullback is taken. So, and we're expecting it to go down, but it doesn't do that. It goes up and it comes down, but it cannot take this valid low. It creates an inner valid high. And again, it takes it by a little bit of price movement up and it gives us valid low. And again, it takes it, and before it takes valid low here or valid high, protected valid high up there. So again, we have inner protected valid high. So this time we are breaking both inner valid pullback protected valid high and outer or the original valid pullback high, which was here. And as you see, and we have a bigger box, which is defining our valid pullback zone. So this is inner valid pullback, and this one here, it becomes valid protected low of this big box. Okay, because this is the lowest point ever happened during this market range. So this was the way that we're defining the chart. So let's go dive into the chart and show you some examples over there. So here now we're on the live chart. So we want to start from this high. So in order to do that, we need to just find the previous valid high or valid low. So this is the place we have it. So here it is broken and it gives us a flip of the market. Here it has the flip point. So we can change the color to flip color. So, but before it comes and breaks this low, protected low, we have other valid pullback. So also we have some valid lows here. So let me write them. Okay. So look, then let me zoom in a little bit. You can see it easily here. We have this down movement. It went up. It created valid pullback, which is also, it has also valid low here. Again, this valid low is broken and gives us another valid low. Okay. As far as it is not broken, let me check if it is a valid low here or it is not valid low. We're going to just check if it is or not because it is not broken. So we cannot consider this valid low. So that's why this is not valid pullback. Okay. So, but here we have a valid low. It ended up giving us a valid protected high. Then again, we have this one valid low. Okay, let's see if it is, okay, so this one is valid low because this high is, okay, no, we don't have valid low here. So that's why we don't have valid protected high. Okay, because this one is not closed above. So that's why we can't consider this one valid low. The only valid low we have was this one. Sorry. Yeah, so these are our valid lows and valid protected high. Now, let's go to the other one, other scenario. Here we have a valid. Okay, yes, this one is valid because it is broken, but the valid one is now, it should be here, but we are waiting to break of the market. So let's just erase this one. So here it is taken, but after some inner valid pullbacks here. Okay, now, but we don't have any break of valid low here, as you see it here in the future. So that's why we cannot consider this one a valid protected high because it is not breaking it down. I mean that if it was broken like this and it was closed underneath, we could consider this one valid pullback here, but it didn't happen, right? So that's why we cannot consider this one valid high, protected high. So, but this part, I mean this one, okay, this one is broken from upside. We don't consider this a valid pullback. The candle we're having in mind is, sorry, bring it back. So the, yeah, the, okay, the candle we are considering is this one, a closing candle. And the other candle is this one, down closing candle, bearish one. Okay. So whenever it is broken here, up there, so we can have what? We can say that, okay, we have valid protected low, but this is our protected one, but this one is our valid high because it is upper than this one. So that's why we're extending it up there and we're calling it valid high here. Let me erase this. Okay. We call this valid high. So then we have some inner valid protected high and inner valid protected low. So as you see here, we have a valid protected high, which is confirmed almost in this part. I think it was confirmed in this one, right? So, but later, right away, we had inner valid pullback low. It shows that whenever you have inner valid pullback high and inner valid pullback low, inside valid pullback, we have some range happening. So it doesn't matter if it is inner or outer valid pullback high and valid pullback low, which is confirmed. It shows that the range happening inside this candles, inside this area. Now, if we continue this, it goes like this one. And if I want to just draw the pathway for this one, it's going to be like this. Okay. This one, and this one, and finally this one. So, and I'm going to make this one blue because it is our protected way. So now, if you consider this one, consider this blue one, we have some inner movement, which is these. I've already done that. We call this order flow. Okay. So, and before I forget, if you are watching this video, you should have already finished previous parts, practices, and drills. You should know how to just define your valid pullback. You have to know how to just draw your legs based on the swing ones. So if you have not done that, please go watch previous videos and do the exercises before you come to this one and try to work on this because you're going to regret it because if you just try to put things that they are not instilling your mind. Okay, they're not ingrained and becomes sort of second nature. So this new material will confuse you, and it's gonna well harm you more than it does any good to you. Okay, so that's why please go back and practice it. So now here this scenario continues like this, and we can see that this is our extension, the last extension that we have. These red ones are, I mean, the order flow that happens inside this. So you can say this one is the inner movement, okay? And why do we have both of them at the same time? Well, this whenever we are in a scenario that is like our leg is going up and this inner movement is up. So these two complement each other and says that, okay, buyers are here. All of them together are trying to move the market upwards. So we are not thinking about any sell scenarios here, okay? Although we're not just deciding our sell scenarios just by drawing these things, but these, I mean, leg counting and leg drawing is the one of the major thing that you're going to decide what to do, where to do things, and when to do it, okay? But before you just decide on doing anything, you need to just have a clear idea of where the market order flow is moving and what the bigger order flow. If you go to the, for example, this one is on 1 minute. Okay, if you go to a higher time frame, okay, it doesn't matter in this area or that. If I go to the 15 minutes time frame, you can see that these blue ones that they were protected high and low and they were just valid high and low, they now turn out to be candles. Okay, so it means they turn out to be the order flow of higher time frame. So then this 1 minute time frame, protected high and low that they define our structure here, they are order flow for the higher time frame. And these red ones are the order flow for our blue ones because the price is fractal, market is fractal. So then you never think about getting any buys here unless you have a low expectation. I mean, small movement, you like scalping for some tips and ticks here. You cannot hold this one because we have a protected valid high in front of the price. It will not let the price to move up easily. And you don't have any idea when this turning will happen in the future unless you are a fortune teller. Okay. So unless we have this break of this low, we cannot think about any buy scenarios here. Okay. So sorry, sell scenarios here. Sorry. Uh, we can have some small sell scenarios, okay, based on this order flows that they become the lower time frames protected high and low. Our expectation should be based on these candles. You cannot expect to get like you cannot short it from here and you expect to get like something like this. Okay, sometimes it's going to be on your favor, but most of the time it won't because you don't analyze the order flow, the higher time frame. Okay, so for example, if you go to, we don't have, I think, 5 seconds time frame for this one. Let me just go to 15 seconds. Maybe we can find that. Yeah, we have 15 seconds time frame. As you see it here, this is 15-second time frame. So let me check if you have 5-second time frame as well. Yeah, we can have it. You can see that in 5 seconds time frame, you can just do trading based off of this one. Look, we have this blue one, which is going down here. We have this blue one, which is going up here. We have this red one, which is going up. The only thing here in this part you're thinking about is just taking any trade which is buy. Or here, you're thinking about sell. But if you go to the higher time frame, based on the stops and the TP and the range you want to just trade, okay, it changes. Here you can take some trades based on 5-second time frame, but you cannot trade based on 1 hour time frame or 1 minute time frame here, okay? Because your range of the movement is different for each time frame. The lower the time frame, the lower the range, okay? So that's all about it. So even you can use this ones, although I'm not in favor of like using these trend lines or something, but some people use trend lines to just define the zones that they are market is trying to reverse. For example, like here, if we want to just put the trend line on that, the way we draw trend line is just by connecting 2 or 3 swings, okay, together, or the common zone that they are meeting each other, okay, like this one, and from down like this one, okay, like this, and here we cannot have 3 of them, so we're going to connect 2 of them, and also here 3 of them, which is a opening like range. So here also you can use some here as a tension point. So okay, like this, the swing points are really things that they're defining your boundaries. Okay, so where the market is heading, and we can here also do this. Then here we can do this, okay, this, as you see. Okay, then here again, these two, finally it gives us this zone, and also this two, this three, or this two, and it defines our way that the market is moving here as well. So for example, again here, like these two, and done.